All right, May 6th. We're just looking back on last week. This is our group in Riyadh. We also were in Dubai. We'll talk about takeaways and talk about future events. So last week, my big takeaway is not only can Carl Pro set up some plants in Riyadh, or well, let's say Saudi and Kuwait, but a lot of what you all are doing, whether it's tech oriented or whatever it may be, you could have a KSA expansion plan, and we're building an entourage to help facilitate that. So I know that a lot of people, I didn't fully appreciate the market opportunity. So that's one my takeaway from me for sure. And we will be back, as you will see. Let's see if I have it here. Oh, not on this version, but yeah, let me pull it to this version. We will be back the 25th, 27th of October, but also um, flipping ahead on calendar, we'll be back. Where is the calendar? Somehow the calendar got deleted. Sorry. We'll be back also in December. In fact, one thing that we did is we've created a master calendar of all the events that are happening, and I'll show you what that looks like. So a lot of you know this already. I'll just zoom in real quick. So Milken's happening right now. Salt's institutional investor. Marcus Evans. FII goes to Albania, which I don't think I can make, but Greenwich Economic Forum in Hong Kong, Prestol's in Istanbul, Abu Dhabi's got a summit, Super Returns Berlin, I'm going to try to make. iConnections here in New York. We have our June 15th, 18th, San Francisco, Seattle, we'll talk about. World Economic Forum in China, it would be interesting. I can't make that either, but Newport's around the corner. Oh, Hamptons. So we'll do Hamptons at Bridgehampton and SAG. I think you did that. That's how I met you, Andy Fish, right? Through our friend Rob Colorino, who's texted me 5 times today.
That was 5 years ago, something like that.
I want to say 3 or 4.
No, it's more because Rob and I were hanging out on this guy's huge boat. I remember
Well,
what year it was.
call it 4 because we were not hanging out in the summer of 2020, I don't think.
No, it was right after pandemic, like started.
21.
Does everyone know Rob? I met him in South Africa like years ago. I've known him for ages.
Well, well, Rob knows everyone.
Yes. That's so funny.
I have the pleasure of knowing him for about a dozen years though. So
There you go. All right. So as you go forward, we'll have London. We have New York, and then we're off to Riyadh just before FII. And then we have New York, and then we're back to Riyadh. Actually, we're also going to Al Ula, which is this really interesting place, sort of on the West Coast that Alexei said we have to go, and he showed me pictures, and so we're going to do a little retreat there. iConnections next year is in February, if everybody didn't know it, not January. So it's the weekend of the 21st for us in Naples, and then off to Miami. And then there's some other things being scheduled. So that's quick little update on that. I think I covered that. Today we'll talk about a wild month. This is a really good, I thought Ari did a really good job capturing, put that in the chat. Here we go. The takeaways. And there you are again, Carl. For those into deals, we have a no-name pipeline update. Actually, I need to hide that field. So then we'll have, if you're interested in any of these deals, if you want to get the full access, you have to sign our diagnostic. And we also have, I don't think I've shown too much of it, but we have our own AI-driven platform, which is coming along. We have a call on that right after this, so you'll soon be able to access. So if you want to know about Carl's deal, building these $200 million plants around the country and the world, where are you, Carl? ProChem, there it is. You can ask questions, see other people's insights. I think there's a video if you want to see Carl present 1 or 2 times. So that's coming. We're still working out the kinks. And I think that's it. I just wanted to start talking about the West Coast, but questions, comments?
I'm super excited you're going back to Saudi 2 more times. I saw that opportunity when I went with you a couple years ago, and I think it's brilliant. I'm really encouraging people to go as well.
Yeah, well, now I've got friends there. I mean, I've sort of swept through, but I spent 4 or 5 days and really, and it was a great program that I helped, but I was like the sous chef with Roberta. We met 4 princesses. I mean, it's not like they're gonna like invest in all of our deals, and that's okay. But they're doing interesting things. And then the families take note. That sort of gave us a lot of validation. So now the conversations are, how do we help Carl, get his plan off the ground? How do we bring in families that can connect with, principal to principal? I think that's going to be, and then, it's some of the kind of companies that you're working with, Erica, they want, interesting, let's say, entertainment, interesting technology rolling out. It's a whole gamut as they grow their consumer economy, as well as their innovation economy. It was interesting that I think many of a lot of the programs, like the 100-kilometer line, is now 1 kilometer.
Yeah, I did hear that.
That's probably makes sense. Still, it's pretty interesting. And then, I think what I'm hearing is you will have sort of like a Qatar-like rollout of alcohol in certain places, like in Neom, they're like the expat segments or sectors. But they don't want to be, they want to be Dubai, but not Dubai.
Absolutely.
They want to hold to their principles, but they like that dynamic growth. And
They want to be Beverly Hills, not Las Vegas.
They should want to be Singapore, not Dubai.
That's a good analogy too.
yeah.
Carl, I'm sorry, I missed your presentation. What kind of plants are you building?
Excuse me, these are tire recycling plants. We recycle end-of-life tires back into their carbon black constituents and a group of sustainable aviation fuel and a limonene product.
Perfect. Yeah, well, I'd love to see some information on it. Maybe Mark, you can send me over. Or...
Yeah. Well, and you see he has a map that shows basically 12 target areas within 20, what was it? How many miles, Carl?
We circle 200 miles.
200
mile circles.
Amazing.
And let's see a little bonus question. How many tires do we dispose of a year in the US and how many in Saudi? Does anyone have an answer to that?
Saudi is
No,
22
Carl,
million
Carl,
tires a
Carl,
year.
Carl,
Carl.
Carl,
Oh,
Carl, you're giving it
The
up.
teacher
I'm
can't
giving the
answer the
answer.
questions.
Yes.
all right. How many in the United States?
10 billion.
Oh, a billion.
I don't know. I think we're bad. I don't know.
Oh,
I-
we don't make
I might have
1,000 tires.
low.
We don't make 1,000 tires for every person.
A market sizing question here.
Never knew.
Well, it's 250 million roughly. And we can't account for 50 million of the tires. So they're going in Lenny's backyard. And he knows, he's shaking his head. He knows it's there.
Yep, here in Queens.
Then there's a large portion, a third, are burnt.
Yeah, I knew.
Burnt. Talking about. But Carl's got a technology with lower temperature heating, and they discovered it by accident, and then patented it. There are 100 PhDs at it. Typical U.S. ingenuity in Pittsburgh. So yeah, he was well received. We're seeing. It reminds me of my chapter. I was 8 years in Russia. Russia didn't fully innovate. We had that discussion in Dubai. Russia would take Hotmail and create, what is it? They called it mail.ru. They would take eBay and created Molotov.ru. They took, we used to have list service, list.ru. But those are huge multi-billion-dollar companies. And Saudi's doing the same thing, just with like the equivalent of Uber, etc. So although they're jumping ahead on the tokenization. I'm seeing it, tokenization of real estate, some assets, real assets. Let's talk, if it's okay, I'd like to talk about San Francisco and Seattle. But anybody have a question before we do that? And actually, Michael Brotherton, you're on. Any takeaways you want to share from anybody who was there before we move on?
Yeah, no, I mean, I just say it was a great event to be at. So many of the local groups that were there in Riyadh were just so, open to conversation and open to hear about investment opportunities. And normally at these events, when you have to kind of chase people down, it was a bit the opposite, where they're kind of coming to you and chasing you down. And I've We've been a bit busy in this past week, but I have a lot of follow-up scheduled for next week. I'll just say it was a really unique place to be in. Very well done, very well organized, and was very glad I went and attended.
Excellent. Maybe partly to that. I mean, I'm just gonna see if I get some pictures here. The pictures, I highly recommend you go to the LinkedIn version that you probably have to go to. But let's turn and talk about San Francisco, Seattle, and we will have a call tomorrow at 12 o'clock Eastern, 9 a.m. Pacific, and it's going to look a lot like, let's see, Palo Alto. Here it is.
Sorry, Mark, I'm not getting the invites for those.
Okay, we'll make sure we.
Thank
that
you.
It's going to look like this, but since I don't have it all set up right now, but it's going to look like the reception actually is going to be more formal, and it's at Silicon Valley Bank. Instead of the 21st, it will be the 15th of June. Paula Schwartz, here's Paula. She was also in Riyadh, is hosting us at her home afterwards. So we'll be there like 7 to 9. Next morning, we go to Berkeley. They're hosting us again. We're now going to do more of a tour outside of Citrus, including aviation. And Jane Gee is also helping us with that, some other Berkeley grads. And then we're compressing the Stanford on the 16th at Cooley and Stanford, but we're we will have one, and, oh, no, sorry, we're gonna, yeah, well, there'll be a little bit of both that day in the afternoon, including Rosewood, but we will go back to Stanford, but for a morning session. Instead of the lunch going to the family farm, we go to Seattle. And Seattle, I believe, is gonna be Redwood, I wanted to say Rosewood, Redwood that evening, probably possibly at the Boeing Museum of Flight. And then we'll stay there and then go to Seattle, and that's where we need help tomorrow, Erica, is getting the where we will do, whether it's that you're the club that Walter is a part of, or we go back to the Washington Athletic Club, or there are others. There's some law firms.
Okay, so K&L Gates didn't come through.
Not quite.
Okay.
It's a possibility. There's some complications, but Wilson Sonsini, Madrona Labs, that Accelerator Labs, there are a lot of options being thrown around
Okay.
for that day. And then people are telling us we got to come back, just like Riyadh, we got to come back for Tech Week. And so anyways, it's going to look like this. Well, by tomorrow when we meet, this will be updated. But if anybody wants to join, just ping me here and I'll make sure you're invited. I know, Blue, you wanted to, people are at least volunteering you to do some things. But she's got her thumbs up. And I don't blame anybody when it's before 8 a.m. for not being on camera.
Yeah, I also asked my VP friend of Microsoft who did confirm, sorry, that he can speak. I asked if he could figure out how to do a tour of Microsoft. And he asked how many was in the group. So I told him like 50 or 60. So he had to go kind of see about that. But I think, they've been doing a huge remodel, so they should have some cool things they're doing out there. And then maybe he can do something about, he's at Copilot there, and so I'm
Yeah.
kind of checking that out too, but I'm trying to figure out how to fit that in because it's far from downtown. So, but I just pinged an attorney friend, and he's got a big office downtown too, so we can check a few other attorney firms too, since my private club is empty. But I'm also talking to Walter on a chat right now, so we can check into the Rainier Club too. It's less exciting of a place, but it's elegant, and it has its thing.
Okay. So this is, I'll show, am I sharing my screen? I don't think so. All right. So this was as of last night. People flying up. We could do it again. Museum of Flight. We could have a private tour of the Boeing BBJ jet. Then we stay, somewhere nearby that evening. And then downtown, that's what we're trying to figure out. Are we going to the Rainer Club, AI House, World Trade Center, or these other options? And then he's already moving us, thinking me July 28th, first. So
Oh, I see.
some of the speakers, but we're still just mixing it up. The mayor, Lisa Rich, is Lisa on?
Yeah, she's on.
Lisa, well, you were on that call yesterday. You want to add on to this? She may not be able to speak. Mr. Wyatt. Jack Wyatt. On mute. You're still on mute. You're gonna owe us all a drink here in a second, Jack. We like governors and mayors. You've brought us the mayor of Cincinnati. We might have the mayor of Seattle and against the Bellevue.
Well, look, speaking on behalf of the broad populace, we're just thrilled that you're back in our country. We think you belong here, even though you belong elsewhere.
I'll try to interpret that.
Which it must be that you belong. You just plain belong.
Well, so do you, Jack. And you belong in New York. We're gonna see you in the flesh.
I believe that is correct.
You could have held court in Riyadh. You would have been a big hit. But here's the good news. The good news is, I was just showing everybody this is sort of the events happening around the world from Milk, and ours are in bold. But we're going to be in Riyadh in October and again in December. So I'm hoping,
See, you are everywhere.
well, we
These-
are collectively.
The bold assertion that I just made has been proven out.
But you know what we don't have? The Cincinnati and Ohio.
Yeah, it is about time to return.
I'll be there at for my reunion at Denison in early June. June 3rd,
Hey,
4th.
Mark, I need an excuse to reach out to this significant family office in Cincinnati. Do you really want to do something in Cincinnati?
Well, yes, but Jack has to be
What?
best. Jack's going to be best. Jack's bewildered. Like, how could you know somebody in Cincinnati and you didn't tell Jack?
Well, Jack, they do real estate and they own a sports team. I'll leave it at that.
Well, Jack probably owns it with them.
Wait a minute. Well, give us a hint on what sport.
Not in public. Later.
Okay.
All right. Well, Jack's on FC Cincinnati, the football team and the baseball team. So that, and we have former owners of the Bengals. So we probably, what am I missing, Jack?
Oh, well, no, we've got them covered. It's just that it's a private matter,
Okay.
but we've got them
All right.
covered.
The question, Jack, is are you guys really want to do a Cincinnati event? There's nothing else. That was the only question.
Yes.
Oh, for sure. Listen, the Cincinnati events that Mark has administered in the last few years, exceeded all of their expectations, attendance as well as content.
Let's look at Cincinnati.
People are clamoring to return, and let me tell you when to return, depending on what your calendar looks like. Cincinnati has been given the rights to do the first celebration of America's 250th. And it's going to start on October 7th, run 4 or 5 days, and it's called River Roots. And it's going to bring together various craft from lots of America's rivers. And it's a massive undertaking. It's a big secret, but for the fact that I just revealed it to all of your best friends. But I don't mind that because they are your best friends.
So I'm just showing you some of the Cincinnati things. I'm surprised you don't.
Imagine a lot of folks in the room live in.
It was so here's Jack interviewing Tom Browning, who had pitched, what number was he to have the perfect game?
Let me give you some
13th?
Let me give you some context. There have been 24 perfect games in all of baseball history, and his was number 17, which occurred in September of 1988. And just to do the math for anybody who cares, there has been one perfect game for every 50,000 played.
There you go. 50,000. I don't know what you're talking about here, but here we are. Oh, this was the Midwest tour. Look at that. Look at all those cities we hit. Remember that? This was the advanced tour, I think. That's the Cincinnati football.
Yeah, sure is. Yep.
Oh, this must be our testing of it or something at Cincinnati. All right.
And
So I was surprised you even mentioned Cincinnati. Hopefully we've established our bona fides, Andy. All right. So
we can take this all the way into the chat.
So before I go into the wild month and all the data of taking stock, thanks to Stephen. Again, just to remind everybody, since we had a little fuller quorum, pull this up a little bit more. Okay. So this week, really tomorrow is, there's a deal call if you're it's the Batman of deep fake. Dan Brahmi is gonna, but it's a deal. And then we have a coordination call for Newport and then a coordination call for San Francisco, Seattle when the West Coast wakes up. at 12. And then another deal call on oil and gas. Then on Thursday, Jack's in town. So if you are a 361er, it's in our fund, or you're a QP and you're interested in some co-investments, let us know. Because we have an interesting health tech deal that is doing very well. Let's just leave it at that. And then Friday, there's another call on AI for climate tech. And I think that's it for this week. We're just getting ready for the future. And again, the future is Newport, Hamptons, London, Singapore, Mumbai, Riyadh, and but this is going to be special, adding Seattle. So I'm going to leave it at that. Any questions also to see if there's anybody new here? We'd like to introduce new people. Let me just do a double check there. Margaret, you're not new, but you're new-ish. You wanted to say hi? Plus, you're smiling so nicely. It's just
Thank you,
need that
Mark.
energy.
I appreciate it. Hi, everyone. I'm Margaret Butler. I'm newish. I'm a lawyer at Baker Hostetler, where we were delighted to host the 2 recent New York events. So thank you, Mark, for bringing this amazing community to us in New York. Got to meet a lot of great people and can't wait to hear, about the latest, obviously, which I missed last week, and what everyone's up to. So thank you.
Excellent. And I know, Anna, you got your hand up. Anyone else new? Matt, you're new.
Yep, I'm new. Yep, just joined. I'm Matt Orr. Great to see everybody. I run an endowment for a single family office based in Ohio. Look forward to learning more and participating in the group, but happy to be here.
Jack's intrigued again, right? One more family office you don't know in Ohio, has he?
Matt, what city is your office located in?
Columbus, Ohio.
C-Bus. The heart of it all. Cincinnati thinks
Yeah.
it is.
No, listen, that's still the state capital. It's the center, it's the center of the action.
There's other new people to say hi, if you don't mind. I see Ryan, I see or David. You're on mute, Ryan, sorry.
Okay, so I think I could start. Hello,
Yep.
Great pleasure to meet you here. So my name is David. I'm a partner in VCP, Vulture Capital Partners. We're a co-investment firm. We're specializing in 3 different verticals across alternative investments, in private credit funds, in value-add multifamily, and the late-stage private equity investments in organic food, CPG vertical. So Thank you very much. Appreciate being here.
Thank you, David.
Great community.
I categorized you this morning as entrepreneur. Is that fair? But you do more than that, though. You got all these 3 verticals. I have to recategorize you.
So we're an investment fund. We're an investment fund where we invest our own funds and we receive allocations to co-invest with us. So that's what we're doing.
Well, thanks for clarifying, because I had your LinkedIn, or I misinterpreted. Maybe I didn't have my coffee. I have my coffee now. Anyone else new? Wanda, I want to talk to you about Warren Buffett, but anyone else new to the community?
I guess I've been here this is the 3rd one. I didn't introduce myself, but I'm enjoying the conversations. My name is Maher Nasri. I'm a founder of Dixie Business Consulting. I lived in US for 2 years. In the past, I established Dixie Business Consulting in St. George, Utah. This is where I picked up the name.
Sure.
Currently, I'm in UAE, Abu Dhabi, but we supervise and monitor a lot of businesses from US. We offering fractional CFO services, financial modeling for fundraising, mentoring the startups or investors, different advisory and management consultancy businesses.
Thank you. Anyone else new? Speak now forever.
Good morning.
Who's that? I missed the movie. Well, Jonathan, yes, go for it, Jonathan.
Hello, everyone.
Jonathan, he's like He's like a cousin that I have long lost, and I just found him.
We did have a lot of similarities yesterday. My name is Jonathan Pirelli. I'm based in Washington, D.C. area. 4to5 Ventures, our second fund. Our first fund invested in Hinge. So if any of you met your spouse, you're welcome. If it ruined your life, I'm sorry. We also invested first early in ID.me, which is a unicorn, and a couple others that did very well in our first fund. And Mark and I were just introduced as we're heading out for a second. We also both have events, which is interesting. So we have an event that will be in Virginia called Distilled Intelligence in October of this year. 500-ish investors, 100 startups, and $1 million prize. The key is not the $1 million prize, it's all the action that happens behind the scenes, but we hope to work together on that and other things. So thank you for inviting me, Mark. It's wonderful to meet
And
everyone.
I think Jack Wyatt might be a great judge for Distilled Intelligence.
Sounds
Part of
great.
500. All right. Well, that was great that you were able to join, Jonathan. And here you are, less than 24 hours later. I think we're good then. Unless anyone else. If not, we're going to switch over and talk about this wild month we've had.
Mark, should we take Adam's question first? It's the
sorry,
first time we've had a hand up before we started the presentation.
Well, that would be par for his course. So yes,
Well,
Adam.
I
go for
just
it.
wanted to get ahead of everyone and get my hand up. That's all.
Yeah.
No, I don't have a question. I wanted to introduce David Drell, who you already picked up. So
Okay.
that's
Well,
it.
perfect. Stephen, do you think we should talk? Rhonda, are you going to be around to talk about Warren Buffett, or do you want to talk about?
Why don't you start with that, Mark?
So, Wanda, what's your takeaway on that?
So nothing unexpected. Everything at the 60th annual shareholders meeting went as expected, except perhaps the last minute announcement that even Greg Abel, which is the new CEO to be, did not expect to be made at that particular time. But this is how Warren Buffett behaves. He likes the limelight, but he was losing his voice, for those of you who had the chance to either participate or listen to him. The business is very strong. 2 months ago, the saying on the street was, liquidate your asset, look or take the cream, because look what Buffett is doing. And Buffett was compiling cash and he did very well on Apple, as we all know. We are in the new reality that Buffett did not evaluate highly in terms of political terms. He said what was expected to hear from Buffett, which is the U.S. should trade with the whole world should trade. The trade should not be weaponized, and that's pretty much the message that we expected. The business is doing very well. The insurance business is contributing to the healthy profits, and the insurance business is expected to grow. The insurance business is run by Jian Ji, which is a friend and co-worker of Buffett in the last 30 years. He's not expected to step down. He will be supporting Abel in running the company. And my take on it, I'm optimistic despite the change at the top, which is not that much a change because Greg Abel was homegrown and he within Berkshire, he has a very strong CV. I think he has a PhD in chemistry, but he's been assisting Buffett in the last 20 or 25 years. He's been his lieutenant. The only thing that I will be watching personally, and I think we talked at one point about that, is Buffett investments in railways. It did not turn out to be that profitable. The maintenance of the railways turned out to be far more expensive, and the logistics, and Greg Abel has been in charge of that. The landscape is interesting, but again, the insurance business, even though we are faced with all kinds of events, provides strong profits and also very healthy drag to the business that help Buffett to manage the money within the company. That's in a nutshell my take. I don't know if anyone else watched that or participated in the meeting.
I know Andrew Randick, you had some comments in the chat. Do you want to?
Yeah, I have a fairly sacrilegious view of Berkshire, in that I adore what Warren's done. I've been to Omaha. I've shopped at Borsheim's and eaten a Dairy Queen at the same time. So I definitely have been to the altar and paid my respects. The Union Pacific, if valued, or sorry, Burlington Northern, if it had the 19.8 times earnings valuation of Union Pacific, it'd be worth $100 billion. The market cap today is about 100, or is about $1 trillion. Cash is 360, probably 100 of that is regulatory and at the business unit level. So you've got about maybe 250 of cash sitting on the balance sheet with no definite purpose, whose book value is 1. You've got a big book value arbitrage there. Weirdly, yesterday, UBS put out a fairly lengthy piece. They've got one of the better known analysts who covers Berkshire, saying that it was both 17% overvalued on an intrinsic value basis, but it was a buy recommendation and a strong one, which is really weird because Warren is an intrinsic value investor and would never buy something that trades over intrinsic value. So I recommend everybody go to one of the last pages in the most recent annual report where it has the number of employees by business unit. And if you think one guy can handle all that, then fabulous, all the power to you. I think there's a lot of stuff like Borsheim's Dairy Queen, Nebraska Furniture Mart, Court, and the list is long, that should be either retained within Berkshire because he promised they would never sell, and the company should spin out all of the major enterprises in there that would trade on their own at relative valuations to their peers. And I think there's a big money-making opportunity there. But that's sacrilege. Sorry, I've said enough. And a lot of people will disagree with what I said, so I'm open to other opinions.
Okay. In my Zoom, I've lost Stephen. There's Stephen, because Stephen, this is becoming the a different kind of briefing. But
That's
Andy,
okay.
quick one.
Yeah, just to add to Andrew's point, when you look at numbers, when you have an insurance company, you have what's called regulatory capital, excess regulatory capital. The regulatory capital has almost no return, so it's dilutive to sort of the whole growth structure of what Berkshire would look like. And by the way, Apollo looks exactly the same way now because they bought an insurance company for permanent capital. So you have to look at the incremental gains over the excess regulatory capital in either Berkshire or Apollo. And you can't just look at it like a regular company. That's it.
Okay, sounds like we should have a deep dive on Berkshire Hathaway. So with that, we transition to Stephen for 265 weeks in a row, actually more. We've been doing these briefings. Thank you, Stephen.
Thank you, Mark. And in here, we're in the 2-screen display again.
We are.
Let's see if this works now. All right. Standard disclosure, so we can get that out of the way, keep the compliance people happy. So I was going to call this presentation 4 Wars and a Market Rebound. as we've had hot wars continuing, a Cold War growing, a tariff war that is unclear as to how it ends, combined with the trade war that's going on. And yet the market's rebounded considerably. Even though uncertainty remains high, growth is slowing and inflation expectations are rising. So I want to just take a look at where we are and where we might be headed. I think this has been a crazy month with a lot of market action both ways or all around. So we've had a lot going on. Let's take a look. Starting with US GDP, which declined 0.3%. And after several strong quarters, I think 8 out of the 9 last quarters were above 2% growth. But this negative print was really driven by net exports. The import number was exceptionally high as people were trying to get ahead of the tariffs and play that game. And I think that's a big part of it. So I think one of the things we have to keep in mind is there will be a lot of economic distortions in the numbers that are being produced for these last quarter and this quarter. And it's just something you have to be careful about, the head fakes that come with that. But yet, through all the challenges and all the puts and takes of the last month, the global equity markets have really rebounded quite well. As you can see, the US markets look the same in terms of the bounce off the lows. And a lot of this has been led by big tech. And that was what brought it down so much from April 2nd to April 8th. And this is the look from April 8th to April 28th in the rebound that's occurred. And when you think about $500 billion for Apple, $250 billion for Microsoft and NVIDIA, the numbers are staggering. But when I looked at the market cap, these are market cap changes. When I looked at the market cap of the S&P 500 to get to 100 billion, I think you go down like 150 companies would be the number of companies that are above $150 billion in market cap. And these are the price moves that we've had in 20 days in the market. So it's really staggering how much these guys have rebounded and how fast they've rebounded. The question is what happens and where do we go from here? And then the outlooks are very mixed on these guys. The big question for the economy is where do we go with the tariffs and deals, and how successful a negotiation will the great negotiator be, and what does it mean? And I think the real issue is how long does it take and at what levels do we end up at? Stan Druckenmiller, maybe one of the greatest investors ever, thinks we should be at 10% tariffs. We got as high as 25, I believe. I don't believe they're going to be coming down as much as Stan Druckenmiller would like. I think we're going to end up seeing tariffs still at a very elevated level, probably above 20% as we go through. I think there'll be a lot of more side deals being cut, but this is the big issue. And this is where all the uncertainty stems, because it's not the normal economics. This is a self-inflicted problem on the global system. But they're not the only issues about trade and tariffs. We have debt deficits and taxes. There are other issues facing, and this is a big mover in what's going on in the markets. It's also highlighting a lot of the interconnectivity that we have in the global system. This is a look at the front running that was done for trade that drove the deficit on trade, but it also is part of what moved the GDP. I think we have a pretty strong economy, and it has been quite resilient. You could see we popped a big job growth number the other day, which is not the sign of a economy going into recession. Layoffs have picked up, but we do have a tight labor market right now. The job openings versus people looking for jobs has tightened up considerably. However, the expectations and the anxiety around the economy is quite high. And this is Americans thinking about their job prospects. Certainly, unemployment moving up to the highest level since 2009. Jobs being easy to find is really low since the war started. That's one issue on unemployment. The other issue is on inflation, and this is the University of Michigan survey of inflation expectations 1 year ahead in the black and 5 to 10 years ahead in the gold. And you can see the black highest level since 81, for the 1 year, highest 5-year level since 1991. And this is creating some challenges for the central banks, many of which are trying to make decisions this week, starting with the Fed. And one of the things that I touched on lightly earlier, is how interconnected the global system is. And when the Fed makes a move, it will have big implications on the currency markets. It'll have big implications on other rate policies. And the big one is really with Japan right now, who is in the process of raising rates. If the Fed moves to lower rates, that could set the currency markets into a bit of a tailspin. So a lot to see on how this plays out, but you can also understand from the previous two charts how this is creating a challenge for the Fed, whose mandate is full employment and price stability. So they're in a bit of a box, and it's likely that, I think the odds are 98% that the Fed's not going to cut this time. Our expectation is that the market was way ahead on Fed cuts since September of last year. I still think the market's too aggressive on it, mainly because I think the economy is stronger than people think. But I also think now Powell has a challenge where if he cuts too soon, he's going to create the inflation that people are fearing. And that is going to put him in a very difficult spot. And I would argue that the more the president pushes against the Fed, the harder it's going to be for Powell to cut rates, not only for the US, but for other central banks around the world, because the independence is paramount to the credibility of the system. So I think that's something we have to keep a close eye on. But in this highly interconnected world, there is a problem where the President Trump and President Xi have to figure it out to lower uncertainty. This is just a look at the 4 biggest imports into the US, most important imports to the US, according to Apollo Global. And they look at it against major countries. And just to put it in perspective, cars are predominant players here. Pharmaceutical is another one. Obviously, tech is a big one as well. But when you look at it, just to put cars in perspective for a minute, in 2023, China surpassed Japan as the top car maker in the world. China's auto production jumped from 4 million cars a year in 2006 to 30 million in 2024. Their exports of cars jumped from 1 million in 2020 to 6.41 million last year, for a 493% increase in 4 years. The top destinations for their EV exports are going to Brazil, Russia, Saudi Arabia, and the UAE. This is part of the reason why I've felt for a while that the US was not going to be losing its status and all that, because I think the ability to unwind the system is much more difficult than people think. I think you saw a preview of this with Germany's challenge with Volkswagen talking about cutting plants. You can just see that the confluence of policy mistakes, of energy problems, of over-reliance on foreign partners for Europe has really put them in a bit of a box right now. So while there was a lot of enthusiasm with Merz getting elected and with the Germany moving off their austerity program, and now you see that Merz yesterday didn't win his vote, so they're not clear. He's gonna have to go for another round in the elections. And one of the issues was he lost members of his own party voting against him because of concerns about debts and inflation again, and releasing the debt brake is uncomfortable for people in Germany. So can they move forward? And I think this is one of the issues as to why I felt all along that while there will be a shift away to reduce the reliance on the US, I don't think it'll go as far as people think. I also think there are some positives, because this sounds pretty negative, and I'm not as negative as people think, but I think some of the positives that we should keep an eye on are de-escalation. I think that the US and China have come to the realization that 145% tariffs and 125% tariffs are unworkable. China labeled them a joke a while back. I think both countries will figure out an off-ramp that allows them to save face to lower tariffs. And maybe it's Trump saying he wants to do it to help the world or whatever. I think they're going to find a way to de-escalate somewhat with both of them trying to save face. I think, Mark, back, I guess it was in 2020 or 2021, I mentioned that Nancy Lazar from Piper Sandler came out with the idea that the Midwest was the best emerging market in the world. And I think that was very early on in people seeing the manufacturing renaissance that was starting to occur in the US. When you had some of the policies of the last administration, that slowed down the reshoring to the US. And now that is reaccelerating under the Trump administration, mainly some of it's forced by the tariff policies and the heavy-handedness of the administration, but that is bringing jobs back. It is bringing manufacturing back. And when it's tied into some of the proposals for potential tax benefits, like accelerating depreciation and things like that, you could actually see now a manufacturing renaissance take off again. But I think it'll be a little more muted because of the way we've handled the whole process of tariffs recently. But we are going through negotiations that should bring some new activity back to the US. But there are other ways that countries are going to respond. And you just saw that one of the Middle Eastern, I think the Qatar put in for 100 Boeing planes. So I think there is more going on there that countries will work to ease the pressures from the US on them that will bring economic activity back to the US and help. I think deregulation is a big positive for corporations as long as we don't go too far. I think the reason regulations are put in is often good, but then we get a little heavy-handed and go too far. I think reversing deregulation can go too far the other way as well, but it will be a near-term positive for corporations as the regulatory burdens got excessive. It was 6% of GDP under the Biden administration, 3% in the last year of the administration. I think the other big positives I showed you is that the earnings reports for big tech are somewhat mixed, but not as negative as people were fearing, although the antitrust issues and other issues are on the rise there. But I think overall, the fears that big tech was going to fold have not come to fore just yet. And I think you will see the spending continue as companies and governments need to be more productive. So I think these are the positives. I think there is a challenge, though, in how the policies have been introduced and the confusion around them. So there was a survey by the University of Michigan asking people of the economic policy of the government, meaning fighting inflation or unemployment, would you say they're doing a good job, a fair job, or a poor job? And the chart would say that people are not saying it's a good job. That would look more like a poor job to me. And in response to this, the president said, I think I'll be able to convince people just how good this is. So we'll have to see where we go from there. I'm not as negative on where we are right now. I think we've pulled out of some of the worst. I think we may have bottomed in the equity markets, but come July, we have another round of discussions, and we have to see where we are at that point and how these negotiations are going with the 15 or 17 countries that really want to do business with us and what that means. So, Mark, a lot to cover. We've got a lot, and we will be getting a new pope at some point as well. So all sorts of stuff going on in the world. So let's jump to people's thoughts and comments.
I mean, Vanessa, do you want to raise your question? That was an interesting point.
I think, the US is leading in low assets, high margin activity, and it has zero capabilities in, manufacturing. And so what is the goal here? I mean, yes, maybe you can manufacture chips and robots, but besides that, what's the point of trying to bring back manufacturing in the US when
I think it's a great question.
It's not a manufacturing, or it's no longer a manufacturing country, but it's not been for so many years. There's no capabilities, there's no talent, there's no one who wants to be paid these salaries. So you can't force against the basic economic principles things to happen.
That one got a lot of
Okay.
responses. Andrew put his
Yeah,
hand up pretty quickly, and so did Samir. So I'll let them go first, and then I'll give you my thoughts. Andrew, do you want to go? You're on mute. Andrew, you're still on mute.
All right. Sorry, I'm on mute. The United States has tens of millions of people who work in manufacturing. Mark, you and I went to college in Ohio. It's filled with Mittelstand companies making tiny little parts and widgets and pieces to everything that's built in America. I think we have more manufacturing per dollar, total dollars of manufacturing than any other country globally. So there, it is a fallacy that the
Not
United States doesn't
competitive.
manufacture.
It's not competitive manufacturing.
It,
So
it is in lots and lots and lots and lots.
I think, yeah, I think that's
Yeah.
the interesting point is the low-end manufacturing, we can't compete, but in
And in some
advanced
manufacturing,
manufacturing, we can, which is where China's trying to get
we
to.
don't make EVs as well as China does. I'm not arguing that, but we make bazillions of things. When I drive around southeastern Connecticut, where we build submarines, jet engines, helicopters, the ecosystem of manufacturing, tool and die facilities, it's massive here. It employs tens and tens of thousands of people that are doing highly advanced manufacturing. So
so why do you have to push for the development of that if we're so good at it, you know?
Well, I think it's there's a national security issue as well, but Samir had his hand up quickly too. So Samir, you want to go?
Samir.
We're having a mute issue today.
Yep. Okay. So thank you. So yeah, so manufacturing isn't what it used to be, right? So we're still doing a lot of traditional manufacturing, but if you look at how China became competitive 20 years ago or 30 years ago, China wasn't doing that much in manufacturing, right? Or 50 years ago, they had literally nothing. So the point is that they just made the investments. They decided to do a Manhattan Project equivalent to get good in manufacturing. As Andrew pointed out, there's already a lot of base in the US for this, and we need to now transform, right, and do manufacturing differently to how we did it in the past. So manufacturing going forward is going to be highly roboticized with AI and everything else, which is what the US is very good at, right? So the US has a lot of strengths in those areas. We're investing in manufacturing. We just closed a big transaction this week in Arizona, which is highly competitive, and it goes on, right? And we're doing manufacturing in those locations in a completely different way that we did in the past. So no, they're not low value added activities. The nature of how those manufacturing jobs will, the kind of training, the kind of skill sets that will be required in those places, they'll be there. And a lot of those manufacturing jobs are partially AI resistant, right? Which when I talk to a lot of Gen Z today, they're worried about the desk jobs going to AI very quickly, right? But these kind of manufacturing jobs, which are part roboticized and part on the floor, are more resilient to that. So there's optimism in that space.
Oh, Leslie.
Leslie, yeah.
Hi, thanks very much for your presentation once again. I always enjoy those. I've got two questions, and one of them is, there's been a lot of excitement about big tech, and for many good reasons. But is there a risk that other countries could put tariffs on services from big tech? Number one, and number two, for those that pay below corporate taxes because of their tax jurisdiction, whether there might be a minimum tax, which has been talked about, that's put on in order to meet the budget deficit gap.
Yeah, I think I think you're onto really what the U.S. is trying to fight Europe on right now. Is there are a lot of tariffs on or taxes of different sorts on U.S. tech in Europe, and that is part of the challenge that the administration is trying to fight through. I think that the services area is an area that countries who aren't big players in it would like to tax more for revenue, and I think that's part of the fight with the U.S. and Europe right now, and why the negotiations will be tough to get a deal with Europe. Is they're going after big tech for
I thought it was 11.
antitrust and other issues is part of
No
what goes
problem.
against
Are you there
what
now?
we're trying to offset. So I think those
Okay,
are real
I'll be
issues
there. No
that
problem. I'll be there in a few minutes. Okay, thanks. Bye.
Depinder, do you want to take another call for us today? Sorry about that. I think Leslie, you're on to an area that is part of the next leg for the big tech. Is they cleared one hurdle, now they got to get through some others, which is antitrust issues inside our country, different kinds of tariffs or taxes on them from other countries. I think these are still all ahead for big tech. I don't think they're out of the woods by any stretch. But I think they're also necessary. So it's how do you play that? I do think it will limit the upside on some of these, but you also have to keep in mind they're sitting on massive amounts of cash right now. Their free cash flows, I think, are combined for the Magnificent Seven or somewhere around $600 billion free cash flow. So that gives them a lot to play around with.
Thank you.
You're welcome. I'm not sure who was up next. Adam, we'll go left to right.
Yes, good morning again. My question is about all the Fed and interest rates, all things equal. With Powell being labeled as too late Powell by Trump, how different is the Fed's view compared to Bernanke, Yellen, and other central banks, all things equal? How different is the Fed's view to inflation expectations versus the data in the decision-making process as to whether to raise rates or cut rates? Do you understand?
I don't think they're different. I think the only thing that's different is the tariffs and how they have to factor the tariffs into, and the trade wars into the inflation expectations going forward. So they're going to probably wait for more hard data than they will. And they got to benefit with the strong unemployment number on Friday to say that the economy's still strong enough that they don't have to cut right now, even though that's what the president would like. But I think, personally, I think this is not the right time for them to be cutting. I think it's too soon.
Yeah, I would.
So, but I think I don't think they're very different in their policy from previous Fed chairs at all. I think they've tried to stay with the same approach.
And that is staying with the same approach as to
being data dependent.
Data first.
Yeah, and not being political. And that's really, I mean, the idea of there's a blame game going on right now if the economy is slowing and if we hit a recession as to who gets the blame. And even in an interview, the president said the other day, I'm responsible for all the good stuff that's going on, and Biden was responsible for all the bad. So that's the game we're in right now. I think Powell doesn't play that game. He's looking at the numbers. We have good unemployment. We have fears of inflation rising, but they're not there yet. So, and he has issues that could push inflation up. So I don't think they're going to be as aggressive as the street would like them to be. So I don't think they've changed their stripes at all as a result.
Last question. When do you see a cut, if any, in 2025?
Do I expect any cuts?
When do you see a cut in 2025, if there is a cut in 2025?
I think it would be in the second half if we have it, and maybe one in July if the economy gets really bad, but before then. But I think that they'll need it in that quarter if we go back, if we don't get tariffs down and don't get deals negotiated. I think that's really what he's got to see is how do the deals, are there deals coming that can bring tariffs down? Otherwise, he's stuck with higher cost of living and higher inflation. And if it's uncertain how it gets put in, and it's not, you don't have a definitive, this is the level of tariffs and we're going to keep jerking the system around to negotiate, then it's going to be harder to get the certainty, which will pull back spending faster and make it more difficult it'll become a self-fulfilling prophecy and you'll move towards a slowing economy that way. So I think that's the challenge for the Fed.
Okay. Thank you, Stephen.
You're welcome. Andrew?
Stephen, could you separate my question into China and everything but China? just remind people, last week you had a chart on non-tariff barriers, and China was climbing over the last decade or more. I remember how far back it went, and Europe somewhat, but China stood out in that respect. And that's been my on the ground observation as well. So I think the shipping data shows us about a 30% shortage of ships coming from China to the West Coast of the United States, but that's only 21% of imports. So my question is, that's the background. The question is that if we're going to, I think you said, we're not going back to where we were before, there'll be deals, et cetera, et cetera. But nevertheless, there's an inflationary impact, unless you think otherwise. But my question goes to, if there's an inflationary impact, by the way, you were quoting Torsten Slot is the economist at Apollo. You put up the chart. So I was at a dinner last week where he spoke, where you can say things at a dinner you can't say in public. And I was on a call with John Zito at Apollo, who's the head of credit and asset management, also a small group. Both of them are getting ready for recession. I think Torsten's, I always take economists because they don't actually run money, but so his was like way up there.
Andrew, what's a question?
Yeah. So my question leads to, do you see inflation and recession, and is the inflation something that flows through the economy and continues, then generates a recession? And if that's the case, how do we start investing in reshoring manufacturing when we're not growing capital, we're actually shrinking? You can pick any part of that you want, Stephen. Any part you want.
Okay.
I don't think I understand. I follow Thorsten, and he's great, and he has a briefing that anyone can sign up for and get. That's worth getting. So let me start with that. I think he's looking at a 90% recession odds. I think the recession odds from most of the strategists I follow in the last week have come down. Ed Yardeni took his down, I think 10% this week to 35% from 45. I think Nancy Lazar is bringing hers down as well. I've seen other economists pulling theirs in because they think that they're seeing some resilience in the overall economy still through what you're saying. I don't know that inflation is going to be as much of an issue as higher cost of living. And the difference for me is whether we get to an end game on tariffs and we know what the final level is, or we keep playing games where we keep manipulating and popping it in on one thing, taking it off in another area and putting it on somewhere else. So I think that's really the determinant, is do we get a final policy on tariffs that would give you the rules for the road so that companies can know what their costs are. And once they know what their costs are, they know what they're going to pass on. I think we're in that mode right now where most companies are planning on passing on costs, so you will have a cost of living increase. I don't see the recession coming unless we really muck up the negotiations again and reverse ourselves.
And
So
are
that's not
those
our base
costs
case.
increase spiraling, Stephen, or are they just one-shot deal?
It depends on how he closes off the negotiations. Initially, you'll have a series of fits and starts, right? You'll have a deal announced with somebody, and then you'll find out that it was a letter of understanding that they're going to do all this stuff in the future, right? So there'll be a lot of head fakes around the negotiations until you have something signed and on paper, and they say they're going to actually start delivering on it. You don't know. In answer to your last part of your question, the way we would play reshoring is, what's it going to take to build what needs to be built to reshore? Because you got to start with the equipment and the plants and the facilities. So you're either going to have to retrofit plants or you're going to have to create new ones. And given the high tech nature of the world we're in, it's probably more expensive to retrofit existing ones than is to build new ones. And if they start putting the depreciation, 100% depreciation on that and give you tax benefits for that, I think that's going to be an attractive area. So what's required to build a facility? So you're going to need materials, you're going to need steel, copper, iron ore, rebar, the like. So that's one area. You're also going to need to power it up. So who benefits from the increase in the grid? Those are areas. And then lastly, national security is not getting any less of a problem. So I think those are the areas you want to continue to invest in. We also think healthcare is another area separate from all this, but it is related. And you saw it today that I think Germany's #1 producer of one of the pharmaceutical areas is closing their production in Germany because they can't compete with China. You're going to see more of that. So we're trying to bring pharmaceutical manufacturing back to the US as a national security issue. So back to Vanessa's question earlier, I think there are national security issues with manufacturing that is a big reason why some of it's coming back. I would also just say, Vanessa, if you look at the China 5-year plan, they don't want to stay in low-end manufacturing. They want to move up into high-end manufacturing to do what we're doing in the US right now. So their whole focus is moving up the manufacturing scale to get higher paying jobs. So I don't think anyone other than Vietnam and some of the Asian nations want all these low wage manufacturing jobs, but people want to get into the advanced manufacturing. So I think that's the way you would play it. I think productivity, Andrew, is the other element where you want to spend and why tech still plays. Wanda?
So Wanda?
So my question is about innovation looking midterm, not this year, but next 5 years. We are bringing, or the intent is to bring high-end manufacturing to the US. For that, that high-end manufacturing requires talent, requires innovation, requires R&D. Meanwhile, what's going on is National Science Foundation budget has been cut to half. I just checked the government spending of the US versus China on R&D. So in 23, China spent $110 billion versus the US $65 billion. That's 23. So this year or next year, I think that differential will be even higher. Yesterday, I got really alarming signal from the University of Netherlands in Amsterdam. They are accepting American scientists because American scientists do not see opportunities to continue their jobs in the US. And I know that it will go by sector. But as an investor, midterm investor, not opportunistic investor, how should we factor in that innovation element into the investment? To what extent the business will be able to pick up that innovation if, I'm not talking Harvard, because Harvard, in my opinion, is the personal vendetta type of a situation, but other universities are moving out from the innovation space because of the money being removed. So how do we factor that into our innovation thesis? Thank you.
I don't think you do in the short term. I think you only do it in the intermediate to longer term, because I think the innovation that you're going to be investing in is already being worked on and done. I think the losing scientists and that whole approach, how we're working with the educational system, which needs some upgrades without question. I think there's a case of sometime a little is enough and too much is way too much. I think we just have to find the balance on some of these policies. But I think near term, you don't, it's already.
So it's Samir, Michael, on.
So, great point about innovation. We see a lot of it, right? Again, we look at a lot of advanced US manufacturing. We see a huge amount of innovation because the US education system is particularly well suited to it. If you look at China, if you look at even Europe, right? So when you compare these three places, even India as well, the US education system is highly suited to that. The investor network here is potentially amenable. What I mean by that is that US investors have gotten used to investing into only a few asset categories, like real estate, AI, crypto, a few other things like that, sort of software or big tech, because these are asset light, and it's supposed to be smart to invest into asset light. It's very hard to get a US investor to believe in US manufacturing, right? Even advanced US manufacturing. The only people who will do it are foreigners, right? So so all the foreign capital that's out there from China, from Europe, from everywhere else, they're buying US manufacturing assets. We see that we just closed on 35 million this week. In that case, this was from foreign investors. As Steve pointed out, right, the national security aspect, which has changed now, right? The world is different to what it was 5 years ago before the Russian invasion and everything else. So now every region of the world is now looking to reshore these capabilities. That wasn't an imperative before. So because of the national security aspect, we are seeing a sort of tentative US investments start to ramp up and start to believe again. The biggest issue we have is that nobody believes that Americans can actually manufacture anymore. Literally nobody does. I have to fight and tell them, we actually do some, damn good stuff. So, yeah, I'll stop there.
Okay, Michael.
So I think listening to what Stephen said and listening to the discussion, I think the opportunities are not simply sector ones like national defense, manufacturing. I think the investment opportunities are, I'll use the term, hyper-specific to particular companies in particular industries. Talk about reshoring, shipbuilding was thrown out as both national security and reshoring manufacturing. We're not bringing back shipbuilding to the US anytime soon, and I have a background in that arena. It takes time to build up that capacity. So unless you have an incredibly long-term view and you're not very risk averse, then yeah, you invest in something like that. On the other hand, manufacturing with plastics, I think, is an opportunity. Shell's cracker plant on the Ohio River that was completed not too long ago. Low-cost inputs and production capabilities. I think you'll see a cluster of manufacturers in the area of that plant. We use very generic terms when in fact, I think we need to really focus in on specifics.
Fair enough. Maher?
Yeah, regarding manufacturing, I guess I agree very much with Michael. For example, the technology sector is difficult to move it to US. It's not like by decision. For example, if you look at the Apple phone, is being assembled in China? Well, if you look at the component and study component of it, some of them is being manufactured in South Korea, especially the screen. So the components is moving now. I guess the manufacturing is moving to what they call it globalizations. Everybody has a line of expertise. Every country is specialized in things. Even a decision is moving some of the manufacturing back to US. From the practical point, it will not be. It's impossible. Because the quality, it will be different. You cannot, moving all the component to be manufactured in one place. Again, China is assembling the iPhone. It's not manufacturing the whole components. That's a fact.
Okay.
So that is like I try to contribute. Maybe other industries, I agree with Michael, like in other sectors other than the tech and industry sectors, it can be possible, I guess. Thank
Fair
you.
enough. Yep, thank you. David?
Yes, there's a lot of things, and I'm not at the level of most everybody here that do not make sense, and I kind of think that some of the stuff that's going on is a distraction for what's really going on, right? We have all this disarray in tariffs and whatnot, and everybody's looking everywhere except where they should be looking. What are your thoughts on that?
I think that the issues are really the US and China trying to sort out their issues and dragging the rest of the world into it for the most part. So if that's what you mean, David, I would say that's probably the root of most of what's going on right now. And you have the wars occurring at the same time. So there is an element, as I've mentioned in the last couple of weeks, that if you want to know what Trump's going to do, just look at the website of the White House. He'll tell you exactly what he's trying to do. So there's no secret to anything, any of his feelings towards his actions. So I don't think he's hiding it. I think the policies and the policy prescriptions kind of take away from what's really going on. But this is a battle between the US and China as to who's going to lead the world, and how does that play out? I would say it's not much more complicated than that. But there is some interesting things going on in terms of the deals that the US and China are trying to cut right now. I think it's kind of interesting that you see the US is trying to work with the DRC and Rwanda to try and deal with some of the issues there. The outcome of that would be to try and get materials out of that and strengthen the US position there when China is pretty well entrenched throughout Africa. So you'll see a lot of that going on, but I think most of this is really the US and China and how they play out. And unfortunately, given the size and the activity from both nations, for the most part, the rest of the world is left as an observer unless Europe can get their 430 million people to act as a unit and get the scale that they bring. I think they'll be beholden to the two nations as well if they don't get their act together.
Okay, thank you.
So
Mark just put his hand back up. Mark, can we take one?
We're gonna bring it home, but go ahead, Mark. You have a quick comment?
Just one thing is like, as a result of this, I call it disruptions of the tariff worldwide. A lot of inquiries starting building up about some of the manufacturers or traders want to move from country to be a country less tariff in order to keep a margin to deal with the US. And that's what's starting in UAE. We receive some inquiries about people need to understand the market here, because they consider themselves positioning them in UAE better than anywhere else. So that is like, as a consequences, I think it's too early for that, but still there's a lot of inquiries now is starting knocking the doors.
Fair enough.
Okay.
Mark, there's a topic we should touch on in the next couple of weeks, which was what the Saudis did with oil and their view on oil prices and oil supply, because that has big implications for, particularly for Russia, but it has big implications for the whole system, because you could make the argument that it'll be hard to get back to really high oil prices anytime soon, given the increase of renewables and the Saudis wanting lower oil prices right now to stop the other people from cheating as much. So going to be some interesting dynamics in the energy markets as well.
I was having dinner after the event, and this person had like 6 brothers and 6 sisters. And the 6 brothers and 6 sisters, and then there were uncles that were former finance ministers, and and they, to really have your finger on the pulse is to have 6 brothers and 6 sisters in all these ministries. And it was, we could do that, but I don't think they really like to share the inside baseball in a forum like this.
No.
But come join us. You can have like a 361 warm reception in Riyadh. We'll have 2 events at the end of the year. It gets a little hot this time of year, as you might imagine. It was hot when we were there, which is why our next events are in the West Coast is warmish, where we're going, and Newport and Hamptons will be good. Mumbai will be a little rainy and warm. But I've got to run. This has been great. 265 feels like, I don't know. It feels like yesterday we were in London with you, Steve.
Really does. Thank you all for joining. Appreciate the dialogue. It's been very cool getting all the input. So,
thank you, everyone.
Thank you.
Thank you, everyone.
Thank you.
Be in touch with many of you soon.
Thank you.
Take care. And my team, I'm going to be right back. Simon. Hi, Candace. I do want to connect.
Hey, how are you? How are you?
I'm good. Let me stop recording.